What's up, everyone? It's Caddy with Money Investing. So I've actually got some good news and some bad news. The good news is that analysts collectively on the S&P 500 expect a 17% upside over the next 12 months. So let me just say that again. 17% upside, in other words, upside move in the S&P 500 expected from analysts over the next 12 months. The bad news is that a lot of those gains they are expecting will not come from information technology, IT, or some of the more tech-oriented names, but instead, it'll come from energy. So I'll go over some of the data points here. I hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us. And all the buy and sell alerts, options alerts, trade ideas. There is a 16% annual discount available for you to access till the end of this month. Link's going to be down below. So since December 31st, 2022, the price of the S&P 500 has increased about 2.8%. And where do industry analysts believe the market's headed from here? Industry analysts on an aggregate basis predict the S&P 500 will see a price increase of 17% over the next 12 months. And the percentage is based off of difference between the bottom-up target price and the closing price of the index as of March 23rd. At the sector level, though, energy sector is expected to see the largest price increase of 31.9%, as this sector has the largest upside difference between the bottom of target and where it's trading right now. And on the other hand, the information technology sector is expected to see the smallest price increase of 6.3%, as this sector had the smallest upside difference between the target price and where it is trading at the moment. Now, I've already gone over this chart, which I think is very, very important. So again, if you are, part of our community, if you are part of our Discord, definitely check out this chart. It's part of our TradingView charts. And what you can see over here is a very simple breakdown of how sectors are performing on an individual basis, right? This is the year-to-date chart, how individual sectors and commodities and assets are doing on a year-to-date basis. So of course, we know that this has been a very, very risk-on environment, right? Risk-on meaning that everyone's been very much focused on Bitcoin, Ethereum, tech stocks, semi-stocks. They've all been doing really well. And as a result, you'll notice that Bitcoin green over 65% year-to-date gains, Ethereum's up 44%, and then we've got technology up over 18%, QQQ's up over 17.5% year-to-date. We got communication services, discretionary up 16%, 10% respectively. Then gold is performing really well, up over 7.5%. We got TLT, which is bonds. Bond ETFs also doing really well, 5.3%. And then we've got the SPY, which is up almost 4% from the beginning of this year. We've got mining's ETF 2.3%. We got XLB, that's your materials, that's down 1%. The dollar index is down 1%. Industrials and staples are down 1.5, 1.75% respectively. Silver is also down 3.25%, so not really doing as well as gold. And then we got real estate down 4%. Volatility is down 5%. Healthcare down 6%. Utilities down 6.8%. Biotech's down 9%. 10-year yield is down 9.7%. U.S. oil, crude oil, is down 10%. And guess what? The worst performing sector of 2023 so far is energy. It is energy. So that's what the analyst prediction is. And the markets are actually going to flip in the next 12 months, where there is going to be momentum in energy, which is right now starting off the year being down, and the worst performing sector down 10%, and tech, the best performing sector, up over 18%. That script, analysts are expecting is going to flip over the next 12 months. Now, we'll, of course, find out if I were to base my opinion, I think there is some, so let me just put it this way. What happens in the first 3 months, obviously, is not any indication to what's going to happen in the next 9 months, right? Obviously, a lot of things will happen. A lot of things will change. We'll get inflation readings. We'll get, interest rate hikes. We'll get macroeconomic data coming in. We'll get the labor market. So there's going to be a lot that comes out. Just because technology is green right now doesn't mean it's going to finish strong. Just because energy is down right now doesn't mean it's going to stay down for the rest of this year. Of course, last year, what we really saw was energy pushing higher, doing really well, and had one of the best years, right? Up 60-70%, was one of the best performing sectors to begin with. But that's also one of the reasons why I suggested that going into 2023, at least in my opinion, we are going to see energy struggle, right? We even had short ideas on energy stocks, Chevron, Exxon, and the reason was very simple, because they're not going to be able to meet up with their comparable sales and earnings growth just how good they were last year. So now they're coming off of some very, very high comparables. The growth rates are going to slow down. The earnings growth is going to slow down. And as a result, I don't think that investors are going to be very excited to be in energy. Instead, there's going to be a little bit of profit taking happening in that sector. And you kind of pile on the oil prices and the decline in oil prices, you've got a much bigger reason to be short energy going into 2023 than to be long, because again, oil prices have fallen 47%, so they're pretty much been cut in half, and yet energy prices or energy stocks and their prices were relatively higher at the end of 2022. So that kind of set us up for a very good potential for short, but that still does not mean that it's going to continue to keep going down. So this right here is the S&P 500 bottom-up target price, from September to March of 2023, and you'll notice that we are expected to go up over all the way up to 46.18. At the moment, that's going to be the target price as of today, and it has gone up from back in, of course, 2022, from November 7th, it kind of looks like my birthday. From those levels at 44.75, it has moved up to a little bit over 4,600. And this is where individual sectors stack up over the next 12 months, with IT only seeing a 6% more upside from these current levels, with energy coming with a vicious rebound at 31, almost a 32%, and real estate as well at 27.2%. As you can see, that real estate also is down pretty substantially, 4.2% on the year so far. So again, we got to keep our eyes and ears open. There's going to be opportunity in some sectors, but I think a lot of it depends on oil prices. If oil prices get a bit of a rebound from these levels, from low $65, and if we are able to break past above this resistance once again and back over 73, back over $81 per share, there is a possibility that energy once again reignites that momentum back up. And we already know Warren Buffett has been plowing money into Occidental Petroleum. So this right here is a company that he's been buying every single week. We just broke down a video. I talked about it a couple days ago. I think it was last week, where again, Warren Buffett buying hundreds of millions of shares of Occidental. Once again, it's become, I think, one of the largest positions that he has in his portfolio. I think it's definitely in the top 5 of Berkshire Hathaway. So, I mean, he's doing it for a reason, right? He wouldn't be plowing hundreds of millions of dollars into this company if he didn't believe there was a lot of potential for upside for Occidental and for energy. So keep a close eye. While energy is still the worst performing sector, doesn't necessarily mean that it's going to stay that way. Yes, there's still going to, in my opinion, be a little bit of downside, considering those earnings comparables and revenue comparables are not going to be as strong, and the markets could sense some vulnerability there. But if oil prices start to rebound anytime soon, there is a possibility that we start to see some momentum back to the upside. So keep a close eye on that moving forward. And of course, Bitcoin, and you got Ethereum, you got technology still pushing higher, doing really well on the year. Still expected to do well, but got to keep a close eye on the downside as well, depending on the valuations. So hope you guys enjoyed this video and a complete update on this. Let me know your thoughts down in the comment section below. What are your thoughts? What are your views and perspective on how this is going to change? Like, this is really what year to date looks like. And this is the script. And do you believe any changes? Like, what type of changes you expect? Which sectors are going to come out ahead at the end of this year? Let me know in the comment section down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.